We are now in the middle of earnings season, and I want to take a few minutes today and show you how I search for stocks to trade based upon earnings. So over the next couple of minutes, I'm actually going to walk you through the process I go through to find stocks that I want to trade or invest in based upon earnings and earnings forecast. So let's get started. Where I've come to is Zacks homepage. This is the homepage for Zacks. Now you can pay for this service. They also have some free services. Once I come to Zacks, I go into the earnings. Now what you'll see, they have earnings in here. They have their top stocks that they believe are going to beat earnings. You can see some of the names they have up there: Apple, Amazon, Facebook, Ford, Google, CVS, and PayPal. Now, if you hover your mouse over any one of these stocks, they'll pull up a slight little symbol. They'll pull up a quick little chart with some fundamental information on here: volume, opening price, and a little chart history. You can also click through and see other things like what the earnings estimate is. But this is not where I stop. So if you page down a little bit, you'll see an earnings calendar that you can click on. But the one don't get me wrong, I go to the earnings calendar, but the one I start with right here is all the latest earnings per share. And I'm going to click on this and open this up. As you can see, this is the weekend, so these numbers aren't actually, there's nothing up here. But the reason why I like this is I can go into this, select a date, and I'm going back to last Friday, July 24th, 2020. And again, you have all the stocks that report earnings. I'm going to the earnings surprise. I'm looking for companies that actually beat the number. I'm going to open up all of them, and you can see that. Now I'll read across the top. Here's the symbol, the company, the time it was reported, the estimate, the actual report, how big the surprise was, the current stock price, and the move that was seen off of that earnings surprise. So here's your first company. I'm not familiar with it. Equinor ASA. So we know it's a foreign company. You can see that they were expecting a loss of 13 cents. They reported a gain of 19 cents. Here is how big the surprise was. And stock current price is $15.60, up $2.56. Not a bad move. What I'll do now is I'll actually just slide down and look at the name of these companies. Now here's American Express. Now here's what's interesting about American Express. They reported 13 cents. Excuse me, Wall Street was looking for 13 cents. They reported 29 cents, and the stock actually was down. All right, so as I go down here, I don't see anything that really interests me. Now you can see all the companies that beat earnings. All right, I didn't see anything I like here. While I'm here though, let me show you what else. I also click and look on sales, which is total revenue. I look for any surprises there. We have these 6 stocks. So here's what's interesting is that this Carter both beat on revenue and beat on earnings. Okay. What I'm doing now is I'm going to pull up the chart on all these companies. So first and foremost, I'm going to CRI. And let's take this out. Let's go a little further out. I just want to get an idea of what the company's done over the past year or so. And as I look, no interest in this. Seems very volatile. You can see it's been trading between 64 and 124. I like to see something with a little more steady climb. So no interest in Carter right now. Let's see what else. We had AutoNation. No interest in AutoNation. You can see right here. Stock ran off the news. So let me make this a little smaller. Stock ran off the news, but you can see that there's a lot of work here in front of it. And the stock's been choppy. Again, not the kind of chart that I would like to see. So I'm happy to beat the number, good for AutoNation, but no interest from Professor Milligan. Now, this one was interesting. So let's work with this one. Sam's. So you look at a weekly chart of Samuel Adams, Boston Beer company, which makes Samuel Adams. So you can see this is a weekly chart. Chart looks very decent. I'm going to switch it to a daily chart. And I'm going to zoom in a little closer. And what you'll see is this. One is you can see that this is one of the things I look at. You can see they reported earnings here. And on that day, the stock looked like it went from about 400 to 438, 440 bucks over that same day, and then ran for the next couple of days. So it looks like there's some follow through on Samuel Adams. I'm looking here at another earnings. Now, on this one, they must have missed the number. You can see that the stock looks like it came in a little bit. Let's see what else we can see here. Here's another one where they actually, looks like they slightly beat the number, but it came in. Here's another one back here where they, let's move this a little bit. Here's another one right here. So there's another one. Here's another earnings call. So the stock, the company does have the ability when it does beat the number to actually make a nice move. So that's what you saw here. And I'll make this a little bigger so you can see it. And the company ran. I mean, over here you can see where the earnings were. Samuel Adams, where you at? Right here. So the deal was Wall Street was looking for $2.20. They came in at $4.69, 113% increase, and the stock just jumped from there. That's a $25 move on $25 move on a $600 stock. So it is a big stock, but that is a big move. You can see the spike. All right, so now that we've done that, the next thing that I'm going to do is I'm going over to my TD Ameritrade account. I'm going to put in here Samuel Adams, S-A-M, Boston Beer, excuse me. And the reason why I like this is pretty interesting here. You can see a couple things. One is you can see the company's history in terms of, so again, you can see right here for this quarter, there's your surprise, there's your green line, there's your red line. So you can see that they have a habit of beating the number. So that's the first thing we look at, which is pretty good. TD Ameritrade has, which is pretty cool, is right here. And I'm going to pull up here. Now, the downside to Boston Beer, excuse me, is that the only competitor I have is Molson's, which is TAP. I'm looking at the chart on Molson's, it hasn't kept up. I'm looking at the 52-week return on Molson's, it hasn't kept up. So I'm not sure if Molson's going to have that same follow-through that we saw in Boston Beer. But that's what I'm looking for. So I'm looking for another stock to trade. Now I'm going to go back. And when I go back to Boston Beer, let's go to the chart. Now, when I came back to the chart, here's the deal. The stock moved from 70 bucks to 828 bucks. It's a $128 move. That's a 64 Fibonacci's. So 888. So let's round that to $828. You're probably looking at, and I'll put a little line here for you guys. You're probably looking at a retracement somewhere back in this range right here. So I would expect the stock to retrace to this line back here. And on that retracement, might be a good time to pick up some. So again, I would expect this stock to retrace to the 760 level somewhere in here, 50% retracement, maybe even more. There is a slight gap right here, but that's what I expect to do. Again, they blew out the number. Things look really good for the company. I would expect the retracement. On that retracement, I might look to actually buy some stock and trade it. So I'll keep my eye on this. We're currently in Zacks. What we're looking at is earnings that we reported on July 21st. Now I came here for one thing. Right down here, you'll see on July 21st, Microsoft reported earnings. Coming down here to the bottom where Microsoft's are. Microsoft reported right here. They reported Wall Street was looking for $1.38. They reported $1.46. So you can see right here that they were almost 6% better. Stock closed down 61 cents. Now over here, what you're looking at is actual chart of Microsoft. In the earnings date, as you can see, there's the stock. Now so let me make this a little bigger so we can all see it. So here's Microsoft. So prior to the earnings coming out, the stock drifted down. Part of it was the market. Reported earnings, they were better than expected, but the stock didn't hold up. All right, you can see what's going on here. When I come over here, so that's that. So now I'm going to my TD Ameritrade account, and I already have Microsoft in here, and I went to my peer comparison. And when I went to my peer comparison, I'm just eyeballing the chart. You can see that Microsoft is the black line, but this purple line, which is ServiceNow, actually has been performing as well, if not better, than Microsoft. Let's go do a little digging, which is what I did. Let's go take a look at ServiceNow's chart. So here's ServiceNow. Here's a chart. Let me take you to a monthly chart real quick so you can kind of get an idea of what's going on with the stock. You can see that the stock has done extremely well. There's a new issue back here in 2012, and you can see what it's done since then. Now let's switch back to a daily. Again, I'll make this a little small so you can see. And the daily chart looks good. Now what's noticing is if you look at this daily chart, it looks almost identical to what happened with Microsoft. So that's the same thing that happened with Microsoft. So let me go in here to my earnings whisper now. And as you see, I already typed in, now I'll do it again, ServiceNow. And you can see what's expected. They do the report Wednesday on the close, July 29th. The consensus on Wall Street is $1.01. Earnings Whisper has it at $1.04. So they're actually expecting them to beat the number. I'm not sure what's going to happen with this, but this is typical of what I like. And I'll go back again. Wall Street's looking for a number here. You can see that historically the stock has run off of earnings. You can see the earnings here. And the stock ran from basically 300 to 350 to 380. So you can see it right here. There's the earnings right here. And it ran from there, from 300 all the way up here before it started pulling back, which was basically 390. That's a 90-point move in 3 or 4 days. And you can see it again. Here's another gap. You can see the gap right here. Stock was at 316 and then gapped open at 342. Here's another earnings announcement right here. Stock sold off ahead of earnings. You can see right here, they reported the number. Stock took off. You can see over the next couple of weeks, next 2 or 3 weeks, stock went from basically down here 215, ran 250, pulled back, the fibs, retracement, and then ran again. So the stock does have a history of running based on earnings. So the question now is, are these earnings going to be good or bad? Now, the one thing that we've seen so far is that when these earnings do come out, they're not staying. So we're going to have to watch how this trades over the next couple of days. The symbol is NOW now. And the last place I'll take you to is, you go back to TD Ameritrade. I'm going to go over here to earnings. Actually, I'm going to put now in ServiceNow. So put that in. All right, so we're looking at ServiceNow, and I'm going to their earnings. And again, you can see that the stock has a history of beating the number. So Wall Street's going to be looking for this. Wall Street's going to be looking for them to beat the number. They're due out. My recommendation on this would be, if you trade it, just so you have an idea, and I'll go back to the chart. If you trade it, I would look for the stock. It's due Wednesday. I'd look for the stock to maybe have a slight run in terms of people trying to get ahead of the stock in terms of earnings. So I would expect that. If the stock does beat the number and have a gap up, I would take my profit. Reason being is none of these tech stocks have seemed to hold on the number. They all seem to have run ahead of the number and then back off. So that's what I would do. So hopefully you got a good understanding of how I trade these and how I look for these. There's another one that came out. IBM beat the number. And after IBM beat the number, let me go back over here to, so IBM beat the number. They did beat it. They had relatively a good quarter. And I'm going to pull up their peer comparison. And you can see IBM beat the number, but it looks like the player in this group is this EPAM, which I had looked at. Now, I'm not sure when they report. I'm going to go take a look right now. But this EPM seems to be the player in here. And let me go back to IBM's earnings real quick. Here's IBM's earnings. You can see that there's a surprise there. There was a surprise last quarter. So most likely we'll see a surprise. Maybe we'll see a surprise in EPM. So I'm going to put in EPAM, EPAM, excuse me. And here's EPAM. Surprise, surprise, another surprise. All right, let's go take a look at the chart. And as usual, I'm going to start out wide and narrow it down. So I'm going to take a monthly chart first. And I'm going back so you can see the company went public again. Another one went public back in 2012. It looks like a nice chart that you and I wish we had owned this stock since 2012. Let's switch this to a daily chart now. And on the daily chart, you can see again, there's your earnings announcement. Here's earnings here. So it looked like it held up and then it fell down, pulled back. Here's another earnings number here. Let's see what else we have. Here's another earnings. There's a gap. Here's another earnings, another gap. So that's the things that we look at. Let's go see what Wall Street's looking for this. Maybe they even reported already. I'm not sure. Let's go take a look. EPAM, nothing available. They're not due till August 6th. There's no whisper number, but the consensus is 97 cents. If we go back to TD Ameritrade and we look at the earnings history, let's see, what are they forecasting for this quarter, which would be right here. Now, the range is $1.13 to $1.25. So they have actually a higher number than what we have with earnings whisper. Let me go back to earnings whisper, make sure I have the right quarter. August, consensus 97 cents. It is what it is. And when we look at the chart, so again, it's another one I would watch trade. I would watch this trade. You can see that there was a run up here. And this run up was on July 20th, which I believe, I'm going to go check. I got to believe this. I'm going back to IBM. And I'm not sure what date IBM reported. Let's see if we can find it. IBM reported. You're not telling me, so I have to go to IBM's chart. IBM reported when? IBM reported on the 21st, probably on the opening. We can check it here, but probably on the opening. So IBM reported, beat the number. Stock ran a little bit. Next day, yeah, it was on the 20th. So here's what I want you to understand what's going on now. IBM reported a number and the stock ran. The same day that IBM reported numbers, and I'll make it easier for you. I'm gonna do a comparison right here. So I'll put the other chart up. I will put up NOW. And what you'll see is, if you look right here when they reported on the 20th, you can see that prior to that, ServiceNow ran up just like IBM did ahead of the number, and it pulled back after the number. So one of the things I want you to get from this, guys, is that when a company that you're following blows out the number, one of the things that you can do after they blow out the number is look at who else is in the group. Look at the other companies in the group. Who's the best of breed? Now, IBM's a great company, but it seems like this ServiceNow, in terms of performance, has performed better in terms of stock performance. So again, I would expect them to beat the number. The question is, will they hold it? I probably would trade this ahead of the number. And what I mean by that is take a position maybe Monday morning, looking for this thing to run a little bit ahead of earnings, and then probably take profits on the before they announce the earnings. Nothing's held up. I do believe they're going to beat, but nothing's held up. So that's where I'm at. All right, I'm going to wrap this up for now. I did find the stock for us to look at and trade, so hopefully you guys understand everything.